What is Norway's sovereign wealth fund, and how does it work? Have you ever wondered how a country manages its wealth from natural resources? Norway has a fascinating approach through its sovereign wealth fund, officially known as the Government Pension Fund of Norway. This fund is designed to manage the surplus wealth generated mainly from its petroleum sector. It consists of two separate funds: the Government Pension Fund Global, often referred to as the Oil Fund, and the Government Pension Fund Norway, which focuses on domestic investments. The main goal of this fund is to convert Norway's finite oil and gas revenues into a diversified financial asset that benefits both current and future generations. This strategy helps prevent the economy from overheating due to sudden oil revenue inflows and stabilizes it against fluctuations in oil prices. Essentially, it acts as a long-term savings plan and financial reserve for the nation. So how does it work? The primary source of capital for this fund comes from surplus revenue generated by Norway's petroleum sector. This includes taxes, ownership stakes, and dividends from oil companies. The fund invests globally, focusing on equities, fixed income, real estate, and renewable energy infrastructure. It holds small stakes in thousands of companies worldwide, representing about 1.5% of all listed companies globally. This broad diversification helps reduce risk and capture global economic growth. Governance is another important aspect of the fund. It operates under strict ethical guidelines, with an independent council on ethics evaluating companies for exclusion based on criteria like environmental harm and human rights violations. The fund actively engages with companies to promote sustainable business practices, aligning profitability with societal expectations. Management of the fund is handled by Norges Bank Investment Management, which is part of Norway's central bank. This structure ensures professional, transparent, and politically independent management. By investing abroad, the fund helps avoid inflation and asset bubbles in Norway. The returns from the fund provide a stable income stream that supports government spending without over-reliance on volatile oil revenues. From a capitalism perspective, Norway's sovereign wealth fund is a great example of how a mixed economy can use capitalist market mechanisms to generate wealth and economic stability. It employs investment and ownership tools to create long-term value while ensuring that resource wealth is managed prudently for the benefit of society. This model balances market efficiency with social responsibility, showing a practical use of capitalism within a mixed economy framework. In practical terms, the fund's scale and influence make it a major global investor. It shapes corporate behavior through active ownership and ethical standards while securing Norway's economic future beyond its reliance on natural resources.